Let's end today with an interesting going public announcement. Luminar is a Lidar tech startup backed by Peter Thiel, Volvo, and GoPro's founder Nick Woodman. Luminar has filed plans to go public via a $3.4 billion merger with a SPAC, SPAC, called Gores Metropolis. SPAC stands for Special Purpose Acquisition Company, which are also sometimes known colloquially as blank check companies. I wanted to mention this both because Luminar is an interesting startup, but also because SPACs are becoming a new way for especially electric and autonomous vehicle startups to gain coveted stock listings. Quoting Bloomberg, led by 25-year-old Chief Executive Officer Austin Russell, Luminar has emerged from a crowded startup field by bringing down the cost of LiDAR sensors, which bounce lasers off objects to guide vehicles. The cost of the sensors can run into the tens of thousands of dollars and has been a stumbling block for companies looking to compete in the self-driving car race. Luminar is aiming to first sell its sensors for advanced safety features in passenger cars and driverless trucks rather than fully autonomous fleets of robotaxis, Russell said. In May, Volvo said it will use Luminar's technology to enable hands-free highway driving in cars starting in 2022. Luminar is the latest entity to merge with a special purpose acquisition company, or SPAC. The investment vehicles have gone mainstream this year, offering a faster route for startups seeking to go public without the scrutiny or risks of an initial public offering. Luminar and its existing investors will end up keeping about 80% of the company as part of the deal, and Gores Metropolis will own about 11%, Russell said. Gores Metropolis raised $400 million, including so-called green shoe shares, in an initial public offering in February 2019. Auto tech companies have benefited from the boom in blank check deals as investors who might have earlier favored traditional IPOs now seek businesses with higher growth, end quote. More info on SPACs from the New York Times. Quote, these companies have long existed on the sidelines, providing smaller distressed companies with capital and the ability to list their shares on a stock exchange, things they might not have access to otherwise. Sometimes called blank check companies, SPACs raise money from investors without having a detailed business plan. Their sole purpose is to find another business to buy within 2 years. If that doesn't happen, the company folds and investors get their money back. In recent months, investors behind SPACs have become particularly enamored with electric vehicle businesses amid rising expectations that such cars and trucks will soon begin displacing vehicles powered by fossil fuels. Shares of Tesla, the world's leading electric car maker, have soared so much that its market capitalization is nearly twice as big as Toyota Motors. SPAC transactions with automotive businesses have so far totaled nearly $10 billion, a trend that Christy Marvin, a former investment banker who now runs the data site SPAC Insider, called the summer of deals with wheels, end quote.